Hello everyone, let's quickly go over the trading flow provided by Goldman Sachs for its hedge fund clients last week. As we can see, the trading flow for US, the overall US equity were net bought for the week. The net flow of the US equity is shown in the black line. So on the last week, it's plus 0.5 standard deviations. And it's driven by long buys outpacing the short sales, 1.9 to 1. And macro products, including index futures and ETF combined, account for nearly 80% of the net buy. And the macro product is shown in the blue line over here. It's plus 0.4 standard deviations, and it's driven by the long buy outpacing the short sales, 2.2 to 1 ratio. The single stock is represented in black, and it's modestly net bought for the fifth straight week, and for the past week it's plus 0.2 standard deviations, driven by long buys outpacing the short sales of 1.4 to 1 ratio. In terms of sector performance, industrial, utilities, and staples were most net purchased for the past 5 trading days, which is last week. And while communication services, consumer discretionaries, and we have financials being the most net sold for the past week. Amid a very busy earnings week last week, with several mega cap companies releasing its earnings report, the US TMT, this sector, the black line here, which includes technology, media, and telecom, pretty much all the mega cap stocks are grouped into here. They collectively saw the largest net selling in the past 5 weeks. Although, if you look at since October till today, this basket, the TMT, is still a net bought. And hedge fund also net sold US consumer discretionary, which is represented in the blue over here. Consumer discretionary for the 5th straight week. And it's the 6th out of the past 7 weeks were net sold. So as a conclusion, the hedge funds are showing a risk-on sentiment for the week because they're still net buying, but it's a risk-on sentiment. But they're adopting a cautious stance towards sectors typically outperforming in the early stage of economic cycle, such as technologies and consumer discretionaries. So they're going easy on those. They're shifting away. But conversely, they're increasing their net purchasing on defensive and cyclical sectors, which often outperform during the late cycle of the economic cycle. So pretty much the hedge fund is positioning for a late cycle, and they're showing cautious optimism. Thank you.